Bob Pisani here. Welcome to the ETF Edge portion of Halftime Report. Trying to keep up with the frenzy of retail trading is not easy, but our two guests today, well, they're trying. Jamie Wise is the founder of the newly launched VanEck Vectors Social Sentiment ETF. That's BUZZ, Buzz. And Art Amador is the brains behind the AI-powered equity ETF. The symbol there, AIEQ. He uses artificial intelligence to pick stocks with the highest capital appreciation. Jamie, we had you on a month ago when Buzz launched with Dave Portnoy as your partner. You've got nearly $500 million in assets under management. In just a month, the fund's heavily weighted towards all those old school tech names, Apple, Amazon, AMD, but you've got a smattering of Square, Tesla, Virgin Galactic thrown in. You've got a month of experience now. What are investors saying on social media about the state of the markets right now?
Yeah. Hi, Bob. Thanks. Great to be back here. You know, it's interesting. You mentioned certainly there's some technology and growth oriented names in the Buzz Index, but they're not necessarily the drivers of performance. And what's always so unique about the index is its dynamic ability to listen to what investors are talking about and understand whether it's growth or value or old industrial names that might be leading performance. So far this year, Buzz is up about 13%. When we look at the names that are driving performance, it's a lot of those older names like Ford, names like American Airlines, even Novavax that are in the top performers. We just rebalanced the index last month. As you know, the index rebalances every month. And we do see that tilt continuing where we have names like Costco, Target, Occidental Petroleum, Norwegian Cruise Lines, even United Airlines coming into the index. So a bit of a shift more towards those industrial and value names away from some of the higher growth tech names.
Yeah, quite a diverse group that you've got in there. Now, Art, AIEQ continues to have a fairly heavy bets on old school tech. Apple, Applied Materials, Alphabet, Intel, your top picks here. What in your model is continuing to recommend a heavy weighting in technology? Even though you could go anywhere, the model actually takes you.
Yeah, so Bob, the IBM wants and AI models are observing positive signals right now for technology hardware demand. And these signals are being aggregated across news, social media, industry reports, market data, financial statements, and much more. Lastly, hardware is driving the need for chips. So AIQ is materially overweight in semiconductor names. And this has really benefited over the last 12 months. AIQ is up over 80%.
All right, Art and Jamie, thanks very much.